All right, so we just finished chapter 10. If there's something that was in there that you weren't finishing with or didn't get done, let me know. I know we got a couple people that not just in this class, other class that might need to take a test. Let's set that up this week so that you can complete that. Let's take a look at chapter 11 as a whole here real quick. You can see there's only 3 sections to chapter 11. And we're going to do something different this week so that we can catch up a little bit. So we're going to do 11:1 today. Okay. And then we meet on Wednesday, right? We will do 11:2 and 11:3 on Wednesday. And it won't take very long. And more likely, you'll have about 20 minutes at the end of Wednesday. And what we will do is we will just do the study guide. We will not do the mastery problem for this chapter. Okay. And then we will take the test on Friday over chapter 11. Okay. This chapter is about as quick as any chapter we're going to have. And with the open book, open note thing, the problems aren't incredibly involved. It's more posting. There's some sales returns and things like that, but I think we'll get 11:1 done, no problem today, and then we can get 11:2 and 3 done. You know now that you'll be asked to do the study guide, and I haven't even closed. I'll go back and close the master. You don't even have to do the master. So by Thursday, sometime you want to get that study guide completed so you have some practice with it, and you got a little bit of work in there. Okay. We will be done covering all the material probably with 20 minutes or so to spare on Wednesday. Okay, or it might be 15 minutes, whatever. And then we'll give you time to work on the study guide, and you might have to do some of it, but then we'll just take the test because next week gets kind of messy. We will not meet on Monday next week because of the ITEDs or whatever we call it now, ISAP. And then we won't meet Tuesday because we're doing ISAP again, whatever, and we're not scheduled to. So we won't meet again till Wednesday. That's another reason for just taking the test Friday, start new. We won't do the master problem. And then Wednesday we'll start with chapter 12. So that's the plan. All right. So we want to go over 11:1. So let's take a look at it. Okay. There we are. It says accounting for purchase transactions using the general journal. All right. Purchasing transactions in the general journal. What are we using it for? If you guys kind of remember, that's all we did, right? Was the general journal. Now we've decided that some of our sales on accounts, when we buy sales on account or make a sale on account, it'll go in the sales. When we purchase goods on account, it'll go in the purchase journal. When we receive cash receipts journal. We make payments, cash payments journals. Okay. A journal of 2 amount columns in which all entries can be recorded is called a general journal. Okay. They talk about not every transaction is recorded in special journals. They give you an example when they buy store supplies on account. Okay, when her company 3 Green, remember 3 Green is our company. When she buys things on account, the transactions, like when we buy supplies, you guys have done that. Supplies, we would debit supplies, we would credit accounts payable to that store, or just store supplies, whatever. It depends on what they want. And so when we do that, that transaction doesn't fall under any special journal column. So then we need to make an entry for general. Transactions that does not use cash, okay, can't be recorded in the cash payments journal. It's not a purchase on merchandise, so it can't be purchased as journal. It's not a sale. Okay, so therefore it's got to go in the general journal. Okay. So we will have to put those in the general journal. Memorandum for buying supplies. We will be given a memo for buying supplies on account, meaning we're not paying for them right away. So when we have a memorandum, that will be our source document in the general journal for this type of transaction. So her company, 3 Green, receives an invoice from the vendor when it buys store supplies on account. Memorandums are pre-numbered, right? We've got to remember that. It's attached to the invoice. So this is a memorandum, attaches the invoice, bought supplies on account from whatever company, okay? So we will use a memorandum for a source document when buying supplies on account when it goes into the general journal. Okay, so transaction. Bought store supplies on account from Estes Supply 16525 memorandum 42. We're not paying cash. We're not receiving cash. So that's cash receipts, cash payments, journals, they're out. We're not purchasing merchandise. We're not making a sale on account. That purchases and sales is out. We are buying supplies on account. So it goes into the general journal. This whole part is showing you what you want. When you buy supplies, it increases the asset supplies. When you buy supplies on account, it increases the total accounts payable. Okay. And they just talk about how it's done down here. Up here, this is going to be how we set it up. Supply store is our debit, increasing our asset. But then we're going to have accounts payable because it increases accounts payable, right? Our bill, but it also increases who we have to pay it. Right? We're not going to write a check to accounts payable. We're going to write a check to Estes to pay this, right? So, but we want to also keep track of how much money and how many bills we have. So that's why we have to have a line here that has accounts payable / Estes. Because when we post, we will post this to accounts payable, and it's before that little line here. So we'll put accounts payable here, then we'll post the Estes Supply here. Okay. Estes Supply, why are we doing that? We want to keep track of Estes Supply. That's somebody we're going to owe money to. We need to know how much money we owe. Accounts payable is our total amount of money we owe. We got to post it to there as well. It doesn't mean we're paying this twice later on. Just means we're recording Estes Supply amount of money we owe to them, and we're keeping track of our total amount. We're adding that accounts payable to the total. Because accounts payable normal balance is a credit, so we're increasing this liability. Okay, so that's why we are choosing, and you will be using the / in between the company and on the post reference. They talk about it right here. The journal entry posted to the controlling account accounts payable. We posted also to the subsidiary ledger. This maintains quality of controlling account, gives the sum of the account ledgers. So it's pretty good. All I'm doing here with these highlights is just talking about that diagonal line. It's not like a test question. This is just good reminders if you needed a question, if you had a question. Okay. You think that's okay? That transaction's not too bad. Debit the asset, credit accounts payable in the company. Okay, debit memorandum. So we just had a memo. Now we're going to have something called a debit memorandum. And later on, we'll have something called a credit memorandum. So we just had a memo. It just kind of told us we bought supplies on account and gave us our invoice. It says customers, generally do not keep merchandise that is inferior in quality, quantity, different from what they've ordered, damaged when received. You purchase something online, you get it, it's either damaged, it's not good, it's broken, you can't assemble it because it's bent, it's the wrong color, it's an older model, whatever the case may be. Okay. If they are sent damaged, broken, wrong, size, color, or just different parts in general or a product in general, they will often return it. It says the customer may be allowed to return part or all of the merchandise. A credit allowed to for the purchase price of returned merchandise resulting in a decrease in the customer's accounts payable is called a purchases return. Okay. We return the merchandise. When merchandise is damaged but still usable, it's off something, you have wrong quantity, whatever, they might let you keep the merchandise at a reduced price. A credit allowed for part of the merchandise or the purchase price, of the merchandise that is not returned results in a decrease in the account payable. It's called, purchases allowances. We are going to call this one account purchases, returns, and allowances. So what is purchases, returns, and allowances? Is when we purchase something, we want to return it for a variety of reasons, or we return part of it for a variety of reasons. We keep it at a discount, or we get a right, make our bill lower because we're returning goods. That's what returns, allowances is. Allows businesses to keep track of the amount of purchase, returns, allowance in the fiscal period. You can, as a manager, start thinking about things like, hey, I need to buy from somebody else. They keep shipping us the wrong crap. Stuff like that. Okay. So that's purchases, returns, and allowances. A form prepared by the customer showing the price deduction taken for a return of allowance is called a debit memorandum. Why we call it that? The form is called a debit memorandum because the customer records the amount of the debit in the vendor's name, meaning they will decrease it. Okay, so you're like, okay, that's a lot of verbiage. So, for example, Estes Supply was somebody we use later. Let's just use them. Okay, let's say we owed them $1,000. Okay. Because we bought something online, we bought it from them on account, they shipped it to us, we're gonna pay them later. They ship it to us, and either all of it's broken, or let's say they ship us the wrong stuff and they're gonna discount us $200. Can you keep it? Sorry, yeah, okay, we'll keep it, but we're not paying you full price. We'll knock $200 off. That's fine. So then you're gonna have to debit the company, right? Because we no longer owe them $1,000, we only owe them $800. And we will debit them after we get this debit memorandum telling us that happened. Okay, so that's one of the ways that we can kind of get this is you'll get a debit memorandum with a price that we no longer have to pay that's going to be adjusted. Okay, so how do we do this? The transaction says return merchandise to Mobley Tools 4390 covering purchase invoice 528, meaning we charged it to them earlier in the purchase journal. We got a debit memorandum we're using that says we return merchandise. So you need to lower the bill by debiting accounts payable in the company. So before, when we bought supplies on account, we would debit supplies, credit accounts payable, and the company. Well, now we're no longer going to owe them so much money. We took some off, or you could take all of it off. But either way, you're going to debit the company and accounts payable. That's why when you see debit memorandum dealing with this stuff, debit memorandum means debit the account payable and the company. You're taking it off their books. And then we're going to credit a new account. This new account is called purchases, returns, and allowances. Okay, purchases, returns, and allowances is a contra account to purchases. Purchases is a debit balance. So what do we know about the word contra in accounting? Contra means doing the opposite. If purchases is a debit and purchase returns allowance is a contra account to it, that means they must be credited. That's the normal balance. Okay, so when we purchase something, we put it in the purchase journal, we debit purchases, credit accounts payable in the company. When we return stuff, we will get a debit memorandum that will say we're returning it. You now debit the account payable in the company because you're taking that amount of money off, and you're going to file it under purchase returns and allowance credit. And the reason we do that is it'll help us keep track of how much we've returned. Okay. Now, when you're done, you got to post. So not too bad. They want to show. So first they say post from the general journal to the accounts payable subsidiary ledger. So what are we posting? They post to Estes Supply and Mobley Tool. Estes Supply here is a credit for $165, credit to credit. Mobley Tool here, you see how it's the line, so the vendor goes second because it's listed second, so it goes underneath. Mobley Tools here is a debit for $43. We lower the bill we had with them. And that's what I highlighted down here. You add the amount to the credit column, credit plus a credit. You put it to the right of the diagonal because that's where it's listed after accounts payable. So you'll put the post number there. You subtract the debit from the credit, put it underneath the right angle, right side of that diagonal. Okay. So we'll post, that's how you're going to post to the accounts payable ledger. Make sure you put the account number up there, the fifth step. And then how you post the general ledger is the same as always. You go to supply store, debit it, add debit to debit, last step, account number, and then accounts payable. You've already done Estes Supply over here where Estes is. So now you're going to post the accounts payable. And you put it on there. Should be good to go. Nothing really of any note here, just telling you what we're doing. Actually, this is a test question. I forgot to answer that. In computerized accounting systems, transactions are posted immediately after they're entered. True or false? True. Okay. We want to post as often as possible. You know, at the end of the day, frequently, depending on what kind of company, but you know, how many charges we had, so that our customers will always have the up-to-date balances. Okay. Okay. That is the section. So let's go look at 11.1.